guys, this is Steven, founder of Phoenix FXC. I just wanted to go over a quick video of mindset and emotions when trading in the Forex markets. So let's just get right to it and begin. For many of life's phenomena, 20% of invested input is responsible for 80% of the results obtained. This is a quote by Wilfredo Pareto. You may also have heard of the Pareto principle. Now, there's another principle that floats around in the Forex niche, that trading is 80% mindset and 20% technical. Some might say that trading is 90% mindset and 10% skill, or 10% technical. Me personally, I like the Pareto principle. I like the 80-20. The Pareto principle is named after the famous economist Wilfredo Pareto that specifies an unequal relationship between inputs and outputs. This principle is used in many aspects of business and life. The principle states that for many of life's phenomena, 20% of invested input is responsible for 80% of the results obtained. Following the Pareto principle, 20% of the effort you put into studying, learning, practicing can be responsible for 80% of the results you get when trading. I also agree with the statement that trading, like I said earlier, is 20% skill, 80% mindset. Why? Having the right mindset when trading can be the difference in winning and the difference in losing. If your mindset is not right, chances are your trade won't be right. Your trade analysis could be spot on, but your trade's not necessarily going to go right if you don't have the right mindset. If your trades are not right, you can probably expect to lose money. 20% of your skill can make up 80% of your trading output, but the rest of that 80% is all in your head. Quick tip for you guys. Now, let's go straight to your mindset. Your mindset while trading. Your mindset while trading should not be to get rich quick. That's just not a realistic thing with Forex. If you've been sold that pipe dream, I'm sorry, but for most people, it just doesn't work that way. You should not be chasing the money. Although this is pretty much how it starts for most people. Most people get into Forex, trading, stocks, most kind of investments to make money. They chase the money. While it's possible to get rich quick in investments, it's not likely. Plus, it's not very likely that it's going to happen to you. And besides, who wants to trade on luck? Most cases of people who start out trading will be of people losing money. This is normal. You should never expect that you're not going to lose money. You should expect to learn how to win more than you lose. Not necessarily because your trading analysis isn't right. I mean, you won't lose money just because your trading analysis isn't right, or if people don't know what they're doing, but because they have the wrong mindset, like we mentioned earlier. It's a valuable lesson, so I think you should pause and think for a moment about mindset and emotions and how your mindset can affect your trading. Now, one quick thing I want to touch on before we move on is going from demo to live. It's important to change your practices when you switch from demo to live, as well as your mindset. You got to remember that you're no longer playing with play money. You're not playing with demo money, but real money. If you can trust in your trading setup and have good trading practices and you learn from your mistakes, then you should be fine. Well, you should be fine when you're switching from a demo account to live, that is. But when you've got a demo account with 3K to 50K plus, you can't expect to be able to use the same exact lot sizing or being able to place a high number of trades on that live account with a small balance. Why? Well, okay, so you got the demo 3K to 50K. It can handle higher lot sizing, bigger drawdown, more trades because you've got bigger equity, more margin room to play with. But if you're on a $100 account or a $1,000 account, in your demo account was 3K to 50K, you're going to have to adjust your lot sizing. You're going to have to adjust maybe even your leverage, and you're definitely going to have to place less trades than if you were on a 50K account. Just think about it. It's also important to note that for smaller accounts, it's better, like I said, to place less trades. I can't stress this enough, as well as your lot sizing. You don't want to margin out or blow the account. If you place too many trades, what will happen is you'll use up all of your margin. And if you use up all of your margin, you're either going to get stopped out on one of the trades, or if you get stopped out on too many trades, the whole account goes. So if you pair less trades, in summary, pair less trades with lower lot sizing that's more proportional to your balance, this is going to help you lose less money, which is very important. This is one of the tips I give people that I teach. Learn not to lose money first, then learn how to make it. If you can figure out how not to lose money, guys, then your trading is going to be way more successful. If you can figure out how to not lose money, making money comes a lot easier. Now let's move into your emotions, because emotions are very important and they really trap and mess up a lot of people when trading. So, your emotions while trading. Successful traders are separated from those who are not successful by many factors. Could be personalities, could be lack of patience, could be mindset, emotions, trading platforms, internet use, so many things. But a key factor to trading is your mindset, as we've already talked about. But it's important to realize that a key factor to your mindset is your emotions. Your emotions are going to heavily play and dictate how your mindset goes. If you've got positive emotions, your overall mindset's probably going to be positive. So those who cannot learn to control their emotions during a trade, they typically end up losing money, blowing their accounts, exiting too early on a profitable trade, and making other negative decisions. It's no secret in life that bad decisions can come from not controlling your emotions. And honestly, guys, trading is no exception to this. Now, take a look at this chart, the cycle of emotions when trading in the markets. So you can see here that the point of maximum financial risk isn't actually when you're depressed and you've gone through panic and when you've gone through anxiety. It's actually your euphoria, when you get too cocky, when you think you know what you're doing, when you're all happy and then you make a dumb move. And then you go through the anxiety of, oh crap, I made this move. Then maybe you try to deny it and then you go fear, you're like, oh man, this is bad. Then you get a little desperate, maybe try to place more trades, maybe start revenge trading. Then you're going to even increase that, snowball it into panic. And then you're going to get to the point where things blow up. This is probably the point where you blow your account. Now, people either quit here or they quickly figure out, okay, something needs to give. And they get a little sad, they get a little depressed. Sometimes, like I said, if people don't quit, this is where they go find mentors. Like we've got a great mentorship program, phoenixfxc.com/trading-school. Our mentors are fantastic. They will teach you how to get over the emotional process, the basics of Forex trading, how to scalp, how to swing trade, market maker type things, but not Steve Morrow's market maker method. Things like levels, all sorts of things. We have a great mentorship program. But aside from that, this is where people usually look for a mentor and they start to get hope and then they feel a little relief because they're learning and then they get optimistic. Some people go through this whole cycle so many times. We're trying to teach people how to avoid this, how to just trade smarter. And if you've paid attention to some of our other videos, like compounding your account, some of our other webinars, where we've taught you how to scalp, we've taught you how to swing trade, we've taught you how to do fundamentals, technical analysis, a whole bunch of other stuff. Our phoenixfxc.com/library has a whole bunch of documents on things. If you're following our education, chances are you're going to get better at trading. And why? Because we've made it a goal to help you overcome all these obstacles, just like this video is trying to do with your mindset and emotions. So back to controlling your emotions. Just as learning to control your emotions is very important, it's equally as important to know when to actually listen to your emotions and when not to listen to them. If you think about every emotion you've ever experienced, there's usually a reason behind it. Humans have relied on emotions throughout time for many things. For example, fear can stop you from doing something that might get you hurt or warn you of danger. This is a natural thing. Compassion allows humans to help one another, to have empathy, to put yourself in other people's shoes. That's one of the things that makes humans human. There's a lot of beasts that we don't seem to think that they have empathy, that they lack empathy. So that's one of our cool things about humanity. Excitement can be a strong motivator for positive, but also negative results. So keep that in mind. Euphoria and happiness can leave us in fantastic moods to make it possible to enjoy life. But like we just saw in this chart, euphoria can also be dangerous. Emotions are just part of being human, though. It's very important not to let your emotions control your trading. While trading, there's a fine line between knowing when to listen to your emotions and when not to listen to them. And every trader needs to learn that, and it's going to be different for all of you. There's a lot of things that can help with this, such as trading analysis, your strategies, experience, mentors. Like I said, find yourself a good mentor. It can be our mentorship program, it can be somebody you know on Facebook. Just make sure they're legit. There's lots of things that can help you. Confidence is key, guys. One thing you should never do is revenge trade. I see a lot of people do this. Not controlling your emotions can lead to a lot of irrational decisions in life and trading. But exiting a good trade before the market has a chance to move your way is a big thing I see, and also jumping into another trade after a failed trading attempt. That right there is a huge problem with beginning traders, both of those things. You guys get really anxious or scared when the trade doesn't immediately go into profit. Well, that's not realistic. A lot of trades don't immediately go into profit, but a lot of new traders will exit the trade early and then jump back into a trade when they think it's going to go that way, or they'll get stopped out of the trade, they'll lose on the trade, and then jump back in and just try to make their money back where they lost. This is revenge trading. If you're trying to jump back in a trade after you lose, you don't want to revenge trade. You don't want to do the things that I just mentioned. They tend to lose people a lot more money than you've already lost. You don't want to do that. Don't fall into these traps, guys. Good traders find high probability setups. They trust their judgment. They wait patiently for the setup to go into profit. If it doesn't, it's okay, because if you used good risk management, it's okay to lose. The point isn't to win every time. The point is to win most of the time. Keep that in mind. You also need to learn to take a step back. You can't let your emotions cloud your judgment when a trade does not go your way, or if you have simply just lost a trade. You can't get too down on yourself, and it's not a good idea to just give up either. Learn to take a step back, take a break, remain calm and collected while you decide what the best course of action is after things go wrong. Allowing fear, anger, or panic to dictate your next move usually just results in more lost money. Nobody wants that. So if you have to walk away from the keyboard or your computer, just do it. Walk away. If you have to take a week-long break to get your head straight, do it. Learning to have patience while trading will also help keep you from making irrational decisions as well. If you don't have patience, you guys got to learn it. Forex requires patience if you want to make a lot of money. Also, don't trade blindly. I see a lot of people searching for all these signals. It's in their mindset, it's in their mentality. They want to find these signals, and they want to find the signals that go into profit immediately. Guys, I already mentioned not all signals that are really profitable go into profit immediately. A lot of signals have a little bit of drawdown, and then they go into the way they're supposed to go, and they hit TP, and you make a lot of money. But you got to get through the emotional side of that drawdown first. It's normal. New traders have a hard time doing it. Don't beat yourself up. Just learn to get through it. When the market starts going too far in the opposite direction, you've got to learn how to prevent yourself from freaking out and exiting that trade. You got to give it a chance to move into your favor. Now, if you have somebody double check your trade, that's okay. If they tell you, hey, this isn't going to move in your favor, by all means, exit it out if you want. Try to swing. You can try to hedge. There's lots of things you can try to make it go in your favor. So hedging, just a quick tip, hedging is when if you're placing a buy, you place a sell to offset. And then when the sell goes into profit, more than the buy is negative, you can try to close out profit. Or if the buy decreases negatively, you can try to close it out and let that sell right out to bigger profit and overcome whatever you lost. There's a few different styles to hedge. We've got some videos on it. We teach it in our trading school. There's always YouTube as well. But chances are, guys, if you can't control yourself, you're likely going to lose money. If you trade blindly, you're going to lose money. Don't just pop in trades. Don't do that. Learn, if you're going to pop in a trade, learn why it's being called. Learn to do the analysis, even if it takes you forever to do the analysis. Pop it in, do some analysis, try to figure out, okay, why is this being called as a buy in this pair? Why is this being called a sell? What kinds of things does this person that's calling this signal, what's influencing them to think this? What's part of their analysis? Maybe go ask them. If you get a trade blindly, try to figure out why the trades are being called. That way you learn. And then over time, hopefully sooner than later, as you take more trades, you'll be like, oh, hey, this person called that trade, but actually that looks like not a very good trade. I'm going to wait, or I'm going to enter here on this trade instead of where they called it. You'll learn. This is what you want to do. Another big thing that I preach to people, never chase the money, chase the setup. While there are many emotions that blind traders, if you've seen above, or in all our other slides, this video, greed is a devil that tricks traders into entering trades or making decisions that they really shouldn't. Greed is powerful. One of the most important lessons you can learn in trading is to control your greed. This also means using proper lot sizing, leverage, don't place too many trades, even though you want to make money quick. You got to master this. It's a must, guys. You also get in the habit of taking your profits when you've hit 1 to 10% of your account balance. Picture it this way. If you see 20 bucks lying on the ground, are you going to pick that 20 bucks up, or are you going to sit there and wait for it to turn into 40 bucks? Chances are you're going to pick that 20 bucks up. Same thing applies to trading. If you're 20 bucks in profit, don't be afraid to just take the profit and get another entry, get another trade in, look for another opportunity. Don't be afraid of that, guys. It's better to win some than to lose. Keep that in mind. Everybody wants to make money, but if you don't learn how to do these things I'm talking about and trade properly, you're just going to lose. And nobody wants to just keep losing. So separate yourself from the pack, control your emotions, use these tips to get your mindset right, and study hard. We've got free education on phoenixfxc.com in our education tab and phoenixfxc.com/library. Take advantage of this. We've also got phoenixfxc.com/webinars. Our YouTube channel's got education. We've got a trades and analysis chat, telegram.me/trades-and-analysis. Take advantage of our stuff, guys. We've got the paid education. I've mentioned this in this video, phoenixfxc.com/trading school. Check it out. Check out what you get. We've got testimonials here, video and pictures. Check out the different teachers you can choose from. Just remember, at Phoenix, we're not here to instruct you what to do with your money. We're here to consult with you. We're consultants. We want to show you what we do so that you can mimic and learn from us. Thanks for watching, guys. I really appreciate it.